This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on September 29th, 2016. Our time is 8:46 Mountain. Radio show runs on 6:30 CHED, Sunday afternoon at 3. If you ever miss a radio show, they are archived for you to listen to at your convenience anytime on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes as well. Type in the World Financial Report on Radio. You will find us there. We're on TuneIn, and you can find us on YouTube. We have our own YouTube page as well. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. Some interesting notes from the week. As heavy truck sales go, so goes the economy. For most people, the economy's up and downs are best measured by famous indicators like monthly job reports and quarterly releases of gross domestic product. But students of the arcane took special notice earlier this month when the Bureau of Economic Analysis released some disturbing data that didn't make anybody's front page. In August, domestic heavy truck sales fell 29% from the same period of 2015, the weakest month in well over 3 years. Any drop that dramatic could always be an anomaly, but heavy truck sales have been slipping for 2 years. Broad weakness in this category has historically been a reliable hint that a recession is on the way. We have that story, and we have the chart to go along with it that proves their thesis in our free weekly newsletter. Get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com, 1-800-432-1022. One of the other things that happened this week, and I know Harold will definitely have a commentary on it, against all expectations, the OPEC meeting in Algiers came up with a deal to cut crude production. Now, oil did rally, but the deal is only an outline with the details to be agreed at the next OPEC meeting in November. And it's being seen as a change of tactics by Saudi Arabia and a shift away from the country's pump-at-will mantra. Analysts at Goldman Sachs Group said an output cut could add as much as $10 to the price of a barrel of oil, but they, like other strategists, remain very skeptical along as how the accord will be implemented. Harold, we know that they do these deals, and we don't even have an official deal yet, and they're secretly behind the scenes cheating like you know what. So we'll have to wait and see how this plays out. What are your thoughts?
Well, my thoughts are that I've traded oil for over 30 years, and I've seen these type of situations happen before. The thing is, at this particular point, is that most countries are in a recession or in a very bad economy, and there's a huge glut of oil. So they needed to do this a long, long time ago. They needed to cut production a long time ago to get the supply situation back on track, but they never did that. The fact is that almost every OPEC nation and non-OPEC nation that are just producing oil just to bring revenue in. So the fact is that I've seen them do this before. I highly doubt it's going to take, and every indication is that oil is going to drop back down into the mid-30s type of thing. Now, again, they're going to try to do whatever they can in order to boost the price of oil, but if there's no demand for it, or if the demand is that low, all they're going to do is produce oil, and it's just going to sit there. So I don't see any major changes in this. Again, every one of the OPEC members are greedy and in huge financial trouble, and they're going to cheat as soon as they get a chance to. So I don't put a lot of credence in it. We did see one strong day in the market, but the markets have been very flat in almost all commodities for this last for the summer, for sure. The gold market is trading in a range. It's down another $1.80 today. It was down $10 on Wednesday, and it was down on Tuesday. So the market's trading right now between 1,300 and about 1,350, 1,360. It's a fairly narrow range, but again, until some news comes out, I don't see gold doing anything on the upside, but there is potential. The longer that no news comes out and the market just trades like this, there's much more potential for the short-term market to drop. And that's exactly what I see happening. I see the price of gold possibly coming down to around 1,100 in that area. The silver market is down 7 cents. We're trading at 19.20. Silver's trading in a very narrow range also, trading between $18 and $20. And again, gold and silver are going to basically trade together. Forget about platinum and palladium. They're not doing anything at this particular point. Oil obviously had a big day on Wednesday, but nothing much is happening as far as a follow-up goes on Thursday as we're taping the show. The oil market's trading right now between $42 and $48, so it's trading in a fairly narrow range. The U.S. dollar is the major situation. The U.S. dollar is where you want to pay particular attention at this particular point. Every country right now is in trouble. Every currency is down because every government is dropping their interest rates. So by dropping interest rates down to 1% or 0.5%, it weakens your dollar. And when a dollar weakens, it has to weaken against one particular currency, and that currency is the U.S. dollar. So the U.S. dollar is the reserve currency. It trades against the basket of other currencies like the British pound and the Deutsche Mark and the Swiss franc and the Canadian dollar and the Australian dollar and all that type of thing, and the euro. So the fact is that the dollar, even though it's trading right now, and I know this is confusing, I've had many calls on this, and I'll be happy to explain it to anybody that doesn't understand it. This is extremely important that you understand the currency markets, because right now the trend is for the U.S. dollar to continue to move higher. It's trading right now at about 95, 96, 97 cents. The fact is that eventually, and the only country in the world that could really raise interest rates at this point is the United States. Even though in the U.S. the economy is in trouble, it's not perfect, that's for certain. But the thing is that it's in a lot better shape than almost every other country. So the fact is that the U.S. dollar is the currency that we really need to be concerned about at this particular point, because that's where all the money is going to be made. The U.S. dollar is going to trend substantially higher as other currencies continue to fall. Believe me, if the economy in the U.S. is weak, so is the economy everywhere else. In fact, it's in much worse shape. We saw what happened this year with Brexit and other situations like it, where their currency dropped by 25% in one day. That's how substantial these moves can be. That means that if you had all of your money sitting in British pounds, you lost 25% of your net worth on that one day alone. So that's how important it is to understand the currency market. I've been saying for the last 3 to 4 years that you need to be in U.S. dollar-based investments. In fact, many of our clients have taken that step with us. And look what's happened. The Canadian dollar has dropped to 130, 132, probably going to go to 160 to 170. The Canadian dollar, in my opinion, is going to fall substantially against the U.S. dollar. So it only makes sense that my clients should be sitting in U.S. dollar-based investments. In fact, if you were just sitting in U.S. dollars just alone, you're going to probably pick up 30 or 40% over the next couple of years just on what the currency is going to do. I predict that the Canadian dollar will continue to fall for obvious reasons. The oil market is the major commodity in Canada, and the oil prices are down. On top of that, the Canadian dollar has dropped 30%. On top of that, the real estate market in Toronto and in Vancouver is in a bubble type of thing, and there's concerns there. So at this particular point, with the commodity markets the way they are trading in a very narrow range, there's no money being made trading commodities at this particular point. The other situation is the stock market. You want to be out of the stock market. 90% of the people that trade stocks lose their money. If you have your money sitting in mutual funds or stocks, and that's where your retirement savings plan is, that's not a good situation. Because the fact is that nobody has made money in retirement savings plans in Canada over the last decade, and you won't because of the economy at this particular point. There are moves that you can make to get yourself into a much stronger situation. It involves a little bit of pain at the beginning. It involves, converting your Canadian dollars to American, but I can assure you that that's going to turn out to be a very substantial trade. You leave your money in the bank, you're making 1% or less, probably 0.5% at this point, and you take into consideration inflation and taxes, and you're losing your money keeping it in the bank. So that is really an issue. You should just keep enough money in the bank to cover your bills. On top of that, where do you invest your money today? With interest rates at 1% or less, you can't make any money keeping it in the bank. And what it does, it unfortunately forces people into the risky stock and commodity markets where you should not trade. Unless you're an expert trader, 90% of the people that trade in both of those markets lose their money. So that's the last thing in the world that Randy and I would want to see, is our clients and listeners to our radio show just doing the wrong thing. It's very difficult to make money. You know, I've been in business for 33 years. I'm a Canadian living in the United States, but most of my clients are from Canada. Most of my best friends and clients that trade with me have been with me for most of my career. So we do have private investments that we allow our Canadian clients to invest in that are in U.S.-based investments that do extremely well, much, much better than you could ever do trading stocks or commodities or keeping your money in the bank. In fact, many of our clients are making over 25% a year in U.S. dollars. So if that's of interest to you, you need to give me a call. Otherwise, you need to pay a lot of attention right now, if you're into making money, to the currency markets. That's the only situation at this point that is relevant as far as making money because of the strong trend that we have at this particular point in the U.S. dollar. Now, we have another major situation coming up. Is obviously the U.S. elections. And as a Canadian living in the United States, it's appalling to see what's happening this year. The two candidates, and by the way, it's a topic of conversation with every single person you run into. Everybody is talking about how poor the elections are going to be this year with Hillary Clinton and Donald Trump. Hillary Clinton, nobody trusts. They think she's a thief and a liar. On top of that, Donald Trump is a big mouth and a braggart, and he keeps putting his foot in his mouth. And for everybody who's been watching the Carnival Act, which is the elections, I mean, it's an embarrassment for the United States. However, one of those two are going to get in, and we have to be concerned about what are the repercussions going to be. Well, the way that I see things at this particular point is that Hillary Clinton, even though she's very unpopular, a liar, a cheat, a thief, and everything else that everybody's calling her, the fact is that she is a politician. And where a lot of people in the United States are sick and tired of politicians and their lies and everything that they've done, the bottom line is that they know how to talk the talk and walk the walk. But when you listen to a guy like Donald Trump, he's an embarrassment. He doesn't know what he's talking about. He doesn't have experience in this, and he's got a lot of problems, a lot of demons in his closet. He's been a businessman for a long time, and he's done a lot of unscrupulous things in his career, and a lot of them are coming out at this point. And again, this is the two choices that we have as the President of the United States, the most powerful person in the world. Chances are is that Hillary is going to win because Donald is going to continue to put his foot in his mouth. And the fact is that even though she's despised by so many people, the fact is that she talks the talk. If you listen to the what was on this week with Hillary and with Donald, it was horrible. Everybody is talking about it, and he talks like a child. These are bad people. These are bad things. Politicians don't talk like that. But the fact is that this is what we're dealt with. The wealthiest people in the United States, believe it or not, want Trump in there. They don't want Hillary in there. The fact is that a lot of the middle class are following Trump because they're sick and tired of politicians. So the fact is that if Hillary gets in, the market will basically remain flat. I don't think anything much will happen. But if Trump gets in and he does, do a much better job over the next month or so, and convinces everybody that he really does know what he's talking about, we could see an initial shock to the market. But overall, I believe that the market is going to respond to him if he does get in. In actual fact, I do believe that initially the U.S. dollar could possibly fall slightly, but then again, I do believe that the U.S. dollar is going to skyrocket, and that's where most of the money is going to be made. So, again, the next month or two is certainly going to tell what the situation is in that respect, but all in all, I'm sticking to my recommendations, and I have all of my investments, and most of my clients are sitting in U.S. dollars, and that's where you should be at this particular point.
Connect with Harold, 1-800-432-1022. Lots of financial questions today. With so many of you listening to our radio show, listening and obviously looking for answers, the person you can call who will be happy to help you is Harold Siegel. Connect with him, rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. As he said, he has different programs in place where you can start making money today. We're in a situation where negative interest rates prevail, and you will not retire in this environment unless you do something radically different. Speak with Harold, 1-800-432-1022. rarecoloreddiamonds.com is the website. rarecoloreddiamonds.com featured Diamond of the Week. This week's diamond is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. It is a beauty. See it online at rarecoloreddiamonds.com, featured Diamond of the Week. Now, Harold was talking about Vancouver and real estate. In our free weekly newsletter, as we mentioned, get this from Harold. We send it out via email, free of charge every week. Vancouver and London top the list of cities at risk of a housing bubble. Vancouver, London, and Stockholm rank as the cities most at risk of a housing bubble after a surge in prices in the past 5 years, according to a UBS Group AG analysis of 18 financial centers. Sydney, Munich, and Hong Kong are also facing stretched valuations. UBS says in its 2016 Global Real Estate Bubble Index report released Tuesday, San Francisco, ranked as the most overvalued housing market in the United States, will not yet at bubble risk. We do know in British Columbia that they put in a 15% tax on those that are foreigners that want to buy. They're considering putting in a tax on those that leave their homes empty. Obviously, the real estate market is very tight when it comes to rentals. They're trying to free up homes that are just sitting there empty so people can rent them. But Vancouver and London top the list of houses and the housing market that are in a bubble. You can read that report in our free weekly newsletter. One of the other stories that really caught my attention, and it's quite frightening because it comes from a man who is very well known and really understands the financial markets. Hedge fund legend Julian Robertson said this week, and this is on Bloomberg, everything is in a bubble and it will end in chaos. The legendary hedge fund manager behind Tiger Management thinks central banks are fueling bubbles throughout financial markets. We don't have negative rates here in the States yet, but I think it's a tragic situation that we've taken rates down this far. Robertson was on Bloomberg. He says, I have known the Federal Reserve all over the world, and they're trying to ensure prosperity, but in doing so, I think they are ensuring a huge bubble, which will be pricked, and all will be hurt by it. He goes on to say, negative and zero interest rates from central banks have allowed increased borrowing at low costs. That money has been in turn poured into financial assets. Robertson is worried about the inflated asset classes eventually falling back to earth. I would tell investors that, in my opinion, there's going to be chaos created by negative and low interest rates. And Robertson, as I mentioned, said this to Bloomberg, Tom Keene, and Mike McKee. A conservative attitude has to be taken, whether that involves hedge funds or not. That is up to the individual investor, but it's a way around bubbles, in his opinion. The bond market is at the heart of the coming chaos, according to Robertson, who says bond buying programs and negative interest rate policies have forced yields to record lows and driven prices to unsustainable levels. I don't think that's good, and I think that's the cause, and that's caused a big bubble in the bond market because people have nowhere else to put their money. And he warned pain in the bond market would spread far and wide. He said it would be a serious situation, seriously affecting financial stocks because banks are holding so many negative yielding bonds, and the chaos would carry over to real estate, where the bubble pops, another area where it would pop. In other words, there are risks whatever the investor chooses and looks, unless they believe in hard assets, and he's talking about art. and he's talking about hard assets in general. Obviously, Harold, legendary figure Julian Robertson, been in the investment business for a long, long time, running hedge funds, and when you hear some of the things that he's saying, chaos, negative interest rates are very bad. You obviously are in a situation where you listen up very carefully because he's given out some, in our opinion, some very, very good advice. We believe hard assets will stand the test of time, and even Donald Trump was saying during the debate on Monday night with Hillary Clinton, he went after the Fed chairman, Janet Yellen, for having low interest rates, creating bubbles. And he said when Obama gets out of office and goes golfing permanently, there could be a situation where they raise interest rates and then all of a sudden the bubble is pricked and it starts to explode. So, Harold, what are your thoughts on the situation?
Well, again, my thoughts are is that the U.S. is going to raise interest rates, and they'll probably do it after the elections. Because, again, they want the reserve currency. So there's no doubt that there's going to be confusion. The closer we get to the elections, Hillary is a known factor. We know what's going to happen if she gets elected. Obviously, we don't know what's going to happen until it happens with Trump. So if he does get elected, we're just going to have to deal with it. The markets will be volatile initially, but I think they will settle down. He is a businessman. I think the wealthiest people in the United States and around the world would feel more comfortable with Donald Trump versus Hillary. She just doesn't have the reputation. So, again, the next month or so is going to tell this whole story, and then we'll deal with it when it happens. But again, every indication is that the U.S. dollar is going to continue to strengthen, and I believe it's going to be the strongest currency by far.
November the 8th.
As far as negative interest rates go, there's no doubt in my mind that that's coming to North America. Again, if the U.S. is going to raise their rates, then we're not going to have negative interest rates here. I just don't see that happening right away.
November the 8th is the election in the United States. In our free weekly newsletter, there is a professor who from 1984 on has correctly predicted who would become president of the United States. You can read that story in our free weekly newsletter. Get it from Harold. RareColoredDiamonds.com, 1-800-432-1022. And he is predicting Donald Trump will win the presidency of the United States. Read that in our free weekly newsletter. He has not been wrong since 1984. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. See it online, RareColoredDiamonds.com, featured diamond of the week. Going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on September 29th, 2016. Our time is 9:12 Mountain. Our radio show runs Sunday afternoon at 3 on 630 CHED. The shows are archived. You can listen to them 24/7, streaming live at your convenience if you ever miss one, on Harold's two websites, HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. Your portable device that you have, we can go on there. We go anywhere you do. Also on TuneIn, and we have our own YouTube page as well. Connect with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. And this is a very beautiful diamond. Check it out. RareColoredDiamonds.com, featured diamond of the week. And Harold, some quotes from the past here in the last 6 months or so about diamonds. Francois Curiel, chairman of Christie's Luxury Group. There's lots of cash in the world right now. At the moment, works of art, diamonds, and jewelry are a safe haven. Also, Angela Burden, Christie's Jewelry Department senior specialist. Having your money in the bank may not mean as much as it used to. colored diamonds are impressive, durable, and portable. In times of global volatility, the ability to easily carry millions of dollars in one's pocket may well be an attractive prospect. Also, from Lawrence Graff of Graff Diamonds, he was asked about choosing favorite diamonds. It's impossible to choose a favorite diamond. They're all fabulous and special in their own unique way. Colored diamonds have to be cut and polished in a very different way to white diamonds. The extraordinarily challenging task of transforming a colored rough into a masterpiece is entrusted to a very select group of master cutters who apply their highly guarded secrets learned over many years with their natural instinct for color. They are true artists. And Harold, when you think about it, I think one of the things I love about diamonds, nature's art, millions of years old, and yet at the same time, here we have people that take rough diamonds, as we've talked about in past shows, when we had that orange and we had that green rough. They take them and they take it to a next level, and that is take them to museum quality art. From nature's art to museum quality art, they are true artists, and some of the diamonds that you see at auction nowadays, the way they are cut, it is simply breathtaking. And we do have some auctions coming up for Christie's and Sotheby's. We will have auction results for you in the next few months. But the diamond world today, Harold, has taken diamond cutting and diamonds to a whole new level.
You bet, Randy. Again, it's just so thrilling to see what's happening at auction when these diamonds came up for auctions the last few years, especially with what has happened to blue diamonds. I mean, blue diamonds have probably made the largest return of any market in existence today, because back in 2005, there was auctions that important vivid blue diamonds sold at about $200,000 a carat. This year, you saw some very important vivid blue diamonds come up for sale, and they sold for $4 million a carat. So from $200,000 to $4 million a carat in the last 10 or 11 years, I don't know of any other investment that would give anywhere close to that type of return with the safety that you have trading in the diamond market. So again, it's extremely important at this point to diversify. If you've got your money sitting in the bank, we've reported several times about the C-15 bill. You've got to be concerned about that if you have your money sitting in Canadian banks. If you don't know what that is, please get in touch with me. I'll explain how your money is at risk keeping it in Canadian banks at this particular point. So the fact is that you can't make money keeping your money in the bank because the interest rates are too low. Obviously, the stock market and commodity markets are very risky to trade. 90% of the people that trade those lose their money, so that really isn't or shouldn't be an option to you at this point. You need to be diversified. You really need to go outside of the conventional investments that you've made in the past to look at investments that are probably much safer and much better for you in the long term. Because, again, to make money in the markets today, anything is a risk over what you're getting paid in the bank, and you're not getting paid anything in the bank. So the diamond market is doing extremely well. The fact is that the major diamonds like the blues and the pinks and the huge whites and all that are setting records at auction every time they go up for bid. We deal primarily in middle-priced auctions, even though we have we have diamonds that start in the 20,000 range, but we also have diamonds that trade as high as 40 to 50 million. The majority of our clients tend to buy diamonds in the 20 to 250,000 range. Again, you're talking about an asset that does not decline in value ever. On top of that, you're talking about an asset that will go up in value over the long term. In fact, they'll go up more than almost any other asset that you own. So the fact is that diamonds are a longer-term investment, but so are your retirement savings plans. If you're in your 30s or 40s or 50s and haven't put away enough money for retirement and are in agreement with me that you're just not making any money having your money in your retirement savings plan, it would make sense to look elsewhere and see what your other options are. And there are other options available that will pay you in U.S. dollars and that you can actually make money with, because right now, the way that the investment world is today, capital preservation is the most important thing, keeping your money, not losing it. And next is capital appreciation. And that's extremely difficult to do without taking a risk. To make money in the marketplace, you have to go into markets that in most cases people are uncomfortable with at this particular point, meaning stocks or trading futures or options or that type of thing. We just don't recommend it. We recommend at this point here being very conservative and sticking with the type of assets that are longer term and safe, where you're not going to lose your money by them trading on the exchanges like commodities and stocks are. So at this particular point, owning physical diamonds is a very, very smart move. And one of the reasons why diamonds are doing so well, the very high-priced diamonds, is because people with a lot of money are very concerned about the currency markets, mostly in their own countries. We're starting to get an awful lot of interest from overseas, from England, because their currency just dropped by 25%. It would have been smart to do it prior to the British pound falling that much, but the fact is, better late than never. And the fact is that, as I mentioned at the beginning of the show, if you don't understand the currency markets, you're at a big disadvantage, and I can help you in that area. A lot of my clients in Canada that bought diamonds 10 years ago, the Canadian and American dollar were basically even at that point. Forget about the appreciation on the diamond, just the fact that the U.S. dollar is 30% higher than the Canadian dollar at this point, and diamonds, as we price them, are in U.S. dollars. It means that everybody who has bought diamonds in Canada with when the Canadian and American dollar were basically even, you're up 30% just on the currency alone. And that's going to get stronger and stronger. You don't want to sell any asset that you have at this particular point that trades in U.S. dollars. And the reason for that is that the U.S. dollar is going to get stronger and stronger, and the Canadian dollar, unfortunately, is going to weaken to 160 to 170 when the U.S. dollar is trading at 110. That means that we could make about 50% return on the currency alone, and I do believe that that's going to happen and continue to happen for quite a long time. So again, if you're sitting in investments right now that are not making you any money, you need to make a phone call, and you need to see what the options are for you moving forward, because if you just stay in the same positions that you're in, if you're sitting with your stocks and your mutual funds and your retirement savings plans, you're not going to make any money. And that totally defeats the purpose of what you're doing. Please give me a call. I've been doing this successfully for 33 years now, and the fact is that I know the currency markets extremely well. There's no doubt in my mind that the trend for the U.S. dollar is substantially higher, and the trend for the Canadian dollar, unfortunately, is substantially lower. So we need to get out of Canadian dollars and into U.S.-based investments where you have a good chance of not only making money on the investment, but also making money on the currency. And that's only available in the diamond market. Now, we not only deal in cut and polished diamonds, which is a major part of our business. On top of that, we own a company called Diamanti Atelier, which is one of the finest high-end jewelry companies in the world. And we have our private showroom in West Palm Beach, Florida, which is one of the wealthiest areas in all of North America. And we have many of our Canadian clients that come down during the winter and visit. In fact, last year, every single week, basically, we had Canadian clients coming down to visit, as the weather in Florida during the winter is beautiful. And again, we have some investment opportunities that are just tremendous. So we own rarecolordiamonds.com, which is our museum quality pieces that are cut and polished diamonds that are investment quality. We also have Diamanti Atelier, which is our jewelry division. But we also have our Eagle program and our Natural Diamond program, which deal with our rough diamond business. We've been mining diamonds for over 4 generations, and that's an area that we bring tremendous expertise. Our clients that are invested in those areas are doing tremendously well. And again, all those investments are in U.S. dollars. You definitely want to call me and find out about this and see if this is right for you. And then we also have our auction business, which is H. Siegel Fine Auctions. We're the only company that has this. Now, I built this company, H. Siegel Fine Auctions, 3 years ago, going on our 4th year. We have just updated all of our everything to do with our auction site, so now people can attend our virtual auctions from everywhere in the world, just on your iPhone. So it's a virtual live auction, the only one of its kind in the world, and we're going to do a lot of auctions starting up again, not only in diamonds, but in other areas too. A lot of fun auctions coming up. And again, these will all be available to our Canadian clients, and our new technology will allow you to attend our auctions anywhere in the world on your iPhone, your iPad, or on your computer. We're extremely proud of that. Not a lot of people are selling diamonds at this point here, and I highly recommend that the one asset that you want to hold on to at this point is your diamonds, because they trade in U.S. dollars. And what I just expressed to you, the increase in the U.S. dollar is definitely coming. The decline in the Canadian dollar, I think, is a given. You need to be in American-based investments, and don't get out of those at this particular point. That's where all your money is going to be made. So, Randy, we're just ecstatic about what's happening in our alternative asset business. We're doing much better than the mainstream, and again, our clients are loving the opportunities that they have with us in diamonds and U.S. dollars at this time.
Featured Diamond of the Week, and the website is rarecoloreddiamonds.com. If you have not been to the website, go take a look around. It's like going to a museum online with the world's finest investment diamonds. Featured Diamond of the Week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. And this is a beauty of a diamond. See it online, rarecoloreddiamonds.com. Now, last week, we had a diamond. It was a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. It was a beauty as well, and the 2 weeks prior to that, we had rough diamonds. And the diamonds we offered, a 2-carat rough, fancy, vivid orange. And we also had a rough diamond, a 5.14 carat rough, fancy, intense green, VVS1. They were diamonds that we had never offered before. When we do the featured diamond, they're usually always cut, but we offered uncut diamonds, rough diamonds, for your perusal. And one of the stories that we had from last week, there was a blue diamond that sold at Bonhams in the UK for $3 million. So you can see blue diamonds continue to sell very, very well at auction. I was looking at Christie's and Sotheby's just last night, their website, to see when they have auctions scheduled. And we have auctions coming up here in October. And once we get the results, we will mention them to you on the radio program. The different results we like to keep track of, obviously, colored diamonds, the rare diamonds, and we pass them on to you. In the first 6 months of the year, the results were simply outstanding, and we do have all those auction results. If you would like to get them, Harold will be happy to send them out to you. But connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. And in the environment that we're in, people are asking themselves, it's very hard to retire in the negative interest rate environment. Everyone is worried about losing their retired money due to another financial crash. And will we ever be able to retire with low interest rates? Central banks, as Julian mentioned, we talked about it off the top of the show, Julian Robertson from Tiger Investments. Central banks have manipulated stocks, bonds, and real estate to a point where they are historically overvalued and in a bubble position and could face a major correction at any time. You add to it, here in Canada and around the world, as Canadian investors may or may not know, Bill C-15 went through in June of this year, June 22nd. That allows banks in Canada to do bail-ins, meaning if they run into financial difficulty, they can take anything over what the CDIC covers, $100,000, and they can take that money to replenish the bank and give you shares in their bank. Talk to Harold about that. He will educate you. Also, we talked about it, oil prices. What will happen with OPEC? There's nothing solid here. They're meeting again in November to flange up whether or not they will cut. It's all talk at this point, unless they have something hard and concrete, and they don't. Negative interest rates, weak Canadian dollar. The housing market in Vancouver and Toronto, very concerning. Also, cashless society. And Harold, that's one of the things that we've talked about extensively over the last year, is the cashless society that they seem to be pushing on us. And to me, I'm quite concerned about that. I know a lot of people say, well, you use your credit card or or you do this or you do that. But, I still like to pay at times with good old hard Canadian currency, and I don't like that option being taken away from me. So that's a concern of mine, and you're seeing it around the world, the cashless society concern. And that's why we advocate hard assets like diamonds and gold and silver, because at the end of the day, those are the things that have stood the test of time over thousands of years.
You bet. And that is so concerning to think that we're going to be in negative interest rates and we're going to be in a cashless society. But there's no doubt in the world that that is coming. There's no doubt. In fact, it's happening, in other parts of the world, in Sweden and in Finland and in parts of Ireland. And basically, even though we don't want to see a cashless society, the governments do. And the reason that is so they can control and know every single penny that we spend and be able to tax us. Because just look at, for example, just take a waitress, for example, that may get paid a minimum wage, but makes most of her money on tips. The fact is that in a lot of cases, the government doesn't get paid tax on that because, it's cash money and it's very difficult to follow. However, now in a cashless society, that same waitress is going to get paid on basically on a card of some type, either on a credit or debit or an Apple Pay or a Google Pay or whatever it's going to be, and the government is going to know every single thing that we do, how much money you make, how much is going to be taxed. They're going to know where all your money is. On top of that, even if you're a valet parking cars, you're going to have your own terminal to collect your own money, and the government's going to know about that. So, the government definitely wants a cashless society because it's their way of controlling us even further and knowing that they're going to get paid on every dime that is made. So a cashless society also is going to draw out all of the counterfeit money, all the drug money, and as a caution to everybody, if you're holding a lot of cash, you're eventually going to have to get that money back into the system, because when they do announce that, we are going to be a cashless society, people are going to start to run to the bank to put their cash into the bank. Well, at only $5,000 a deposit, after you've done that 2 or 3 days in a row, I guarantee you the government, the IRS, Revenue Canada, Homeland Security, whatever, is going to be waiting for you to find out where all this money came from. So, again, it's a frightening situation. I plan on doing a seminar on that as soon as I have all of the information. It's changing almost on a weekly or monthly basis. So we intend on doing a lot of seminars this year on the problems that face us and what the solutions are going to be. Again, we have a lot of exciting opportunities happening with my company. Again, we're in the alternative asset business. We don't trade stocks. We don't trade in the commodity markets. We buy hard assets. We buy physical gold, physical silver when the time is right to do so. We invest in diamonds, a hard asset. We do tremendous auctions. A lot of those are going to come this year. We have tremendous opportunities for our Canadian clients to get involved in amazing investments that are off the mainstream, things that you would never, ever be able to get involved in before because they're private, my own private company investments, but we allow our customers and our clients to invest with us. You need to get out of Canadian dollar-based investments and get something into U.S. dollar-based investments. You'll make an awful lot of money, but by staying in the bank and in the stock markets, I can pretty well guarantee you will never get ahead trading those markets the way you're doing it this time. If you need help, I'm here to help. Give me a phone call, and I'll explain what your options are and how you can get through these very difficult times.
Our featured diamond of the week. You can connect with Harold at any time. He'll be happy to speak with you personally, privately. 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week, a 1.23 carat marquise cut, fancy, vivid, yellow, internally flawless. And it is a beauty. See it online at rarecoloreddiamonds.com, featured diamond of the week. A couple of quotes from our free weekly newsletter, and they're very important. And obviously, it's important that you get our free weekly newsletter. Connect with Harold. He'll be happy to send it out to you. There was one quote from John DeGuy, portfolio manager with Industrial Alliance Securities here in Canada. And I think he really summarizes what's happening in the world today. Economic growth is stalling, and there's little indication that it will resume anytime soon. The only part of the world that is likely to see sustained growth over a long period of time is emerging markets. Traditional equity investments, in contrast, might do comparatively poorly over the next decade or more, since there is really no way to stimulate growth. Governments and households are both stretched more than ever. The population is getting older and less productive, and current interest rates mean traditional first world bond investors might earn negative interest rates for most of a generation. Even with all the stimulus and low inflation, overall large macro trends are ensuring that economic growth will continue to be modest in the developed world. And as well, from Bloomberg, a quote from Wilbur Ross, "It's harder and harder to find value, even if you look in the dustbin." And this is a billionaire investor, Wilbur Ross, 78 years old. He built his fortune investing in troubled companies, including the oil and gas, steel, and financial industries. He's been stymied this year by what he sees as a severe disconnect between gains in the financial markets and what he calls the real economy. "I don't see the big engine for growth anywhere in the world, and yet the market goes prancing along very nicely." Ross said, "I think it's a little scary." And that's one of the things, Harold, you look at demographics. We have an aging society in North America, and growth will be more difficult than it was when the baby boomers were humming along. The emerging markets, obviously, they have younger people in society, and they will have more growth than us. And interest rates, according to many, are going to remain low for a long, long time. And this is the environment and reality that we're in today. And we have about a minute left. And I say to you, what we've been talking about on the program is there are ways to make money in this environment, and people should talk to you.
You bet, Randy. Again, it's just extremely difficult. We've been on the radio show on CHED in Canada now for going on 17 years. Done a good job for our clients. Our businesses have grown because of our clients, and we have opportunities for our clients that you'll never get anywhere else. So, again, it's imperative that you understand what's happening in the currency markets and what happens if the Canadian dollar falls further, which it certainly looks like it's going to, and the U.S. dollar goes higher. There's an opportunity for you to make an awful lot of money. So if that's of interest to you, give us a call. We'll explain what your options are. But again, with low interest rates and everything happening in the stock and commodity markets right now, it's a very dangerous time to be in those type of markets. Give us a call and we'll help you.
Connect with Harold, rarecoloreddiamonds.com. The call is free, and anything discussed is confidential. 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. See it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com. And as we said, in the environment that we're in, if you use the rule of 72, divide 72 into the interest rate you would be getting. Let's say you're getting 1% in a GIC. It would take you 72 years for your money to double. Obviously, if you get a 10% rate of return, your money's doubling every roughly 7 years. In this environment, to be able to retire with these low rates, you're going to have to think in a different way than you've thought before. And Harold has different programs in place where you can be making money starting today. And Harold, thank you for another great show and your knowledge this week.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
How do you invest today so you can retire tomorrow? Speak with Harold Siegel. That's why we do the radio show. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.